Hi, it's Andrew Bell here, and good to be with you as we break into the second half of 2014. Today, we're going to touch on the rental market, which is at an interesting position. However, before doing so, just one very important update on one of the key fundamentals, and that is unemployment. The latest figures released were for the month of May, and they show that the national unemployment rate was steady at 5.8%, and that's the third month in a row at exactly the same level. It's up from a year ago when it was at 5.5%, but the great news is that it's well below the forecast, which ranged from the Reserve Bank's forecast to the federal government's own forecast, and that range was between 6.25% and 6.5%, which they expected to occur during the course of this year. Now, the May figures show that there are 11,564,555 persons employed, which is up 98,700 people on this time last year. And remember that in the previous year, we're up 102,900 people. So this is reflecting growth in employment numbers. It means that whilst we do have population growth, the increased number of overseas migrants is not having a detrimental effect on unemployment numbers. The participation rate is not growing, but that's not overly surprising as we're seeing an ageing population. We're likely to see participation rates trend lower. So all in all, good numbers, certainly suggesting that the economy is going better than most forecasts, and the job shedding that was feared, it's not happening. As we see some momentum in the economy, it's not expected that unemployment should rise sharply from this point on. By the way, it's just another set of numbers that the Reserve Bank are going to be watching in deliberations on interest rates. If unemployment starts to fall, it'll be as a result of a stronger economy, and just means that interest rates are likely to start rising sooner than perhaps if it had been the case of unemployment numbers being higher. Now to the rental market. We have 2.3 million rental households in Australia, with 55% being detached homes and 30% being units or apartments, and the remaining 15% semi-detached or townhouses. With 645,000, or about 30% of renters living alone, and 520,000, or 23%, being childless couples, or what we call empty nesters, and about 200,000 in grouped households, then of course the balance are the remaining combinations. Certainly, those figures suggest that the strongest demand is for smaller households or apartment sizing, which is important to note for investors looking to buy at present. Now, it's really interesting to note that interest rate movements are a critical driver of rental price change. If interest rates are not high or they're not rising, landlords are less inclined to ask for a rental increase. But when interest rates rise, they do go for rental rate increases. And so it's not surprising at present to see that there hasn't been any significant growth in rental rates. And most landlords are favouring keeping a good tenant than squeezing more money unnecessarily. Vacancy rates that are lower than 3% indicate a strong demand for rental accommodation, or rates above 3% reflect oversupply. Now, the national vacancy rate is currently 2.2%, while vacancy rates here on the Gold Coast have dropped dramatically over the past few years, from 5.5% in 2011 to just 1.9% in recent reports. That is the lowest vacancy rate in a decade. Average gross rental yields across Australia sit around 4.3%, but it's higher here in Queensland at over 5%. In the 12 months to the commencement of this year, capital city rental rates increased 2.9% for houses and 3.4% for units. More people are now renting for longer, and over 150,000 people paid more than 50% of their income on rental. Sadly, they'll never be able to save and buy a home. With the continued high population growth and the low construction levels we've talked about in recent reports, rental price growth will trend higher moving forward. Although it is interesting to note that at present investor buying is at a very large proportion of household lending, indicating lots of investors have been entering the market. That certainly tells me that people need to talk with a reliable real estate agent to confirm where's the strongest demand for rental accommodation so you're not caught short. Well, that's it for this fortnight. We're extremely busy here with huge numbers escaping the cold southern states for the school holiday break. No surprise, sales activity is very strong at present. Now, don't forget to book for our September 20 ball. Only 9 tables remain. So that's it for this week. Stay safe. Bye for now.